Hello and welcome to the trade setup. In this video we are looking at Oracle. It is time for another update, and on this chart we are focusing on the structure from the 2002 low, this bottom after the larger correction, and we are tracking here a larger ending diagonal. We could pay some attention to the large time frame structure, but it doesn't really impact how this movement would overall be developing, as I find it pretty difficult to identify an impulse in this structure, and a diagonal would be ultimately my most preferred interpretation. So in this ending diagonal we would have a wave 1 in place, we would have a wave 2 bottom here, and then this would be our wave 3 to the upside that would be currently developing. Within this wave 3 we are of course tracking an ABC structure, since this is an ending diagonal. And within this wave C, we would actually like to see one more high before we can consider a more clearly full count to be in place. This interpretation can remain a focus as long as the Fibonacci retracement levels still hold in this interpretation for continuation to higher prices. So we are watching the levels down to $118.6, and from this region we would like to see the reversal to new all-time highs within a wave 5 before forming what can be expected to be a quite substantial top before a much more significant correction. And of course, other interpretations are always possible, but based on the price data we have available on this chart, this is what I find to be the most likely outcome, at least from an Elliott Wave perspective. Now, internally in this structure we have of course what it seems to be another ending diagonal within the wave C. This isn't actually necessary, the wave C can work out as an impulse, but once again, we would struggle to even identify a potential impulse in this structure, and I believe it works out much better as a diagonal itself, where this would be a wave 1 up, a wave 2 down, and we would have a wave 3 top also in place, where now we would be tracking the wave 4 correction. Now, from a larger time frame perspective, we would identify a counterexample within this wave C of the wave 3 to actually have a wave C within an impulse, but as we go into a smaller time frame, we can actually identify that once again this would probably work out better as an ending diagonal as well. Which also leads me to the point that having such a sharp correction is something we can generally expect to form after diagonal structures. It's not always the case, but it does oftentimes happen to play out in corrections following a diagonal structure. And in this wave 4 in yellow, we would primarily like to see this white interpretation play out. Why? Well, it is because within the wave 4 we expect to have a 3-wave pattern, right? If it were the wave 4 of an impulse, a triangle could have also been an option, but what is certain is that we do not want to identify a 5-wave move to the downside, because in such a scenario, we would be forced to actually look out for continuation to lower prices after a correction. We have the orange interpretation, and this has been a significant threat and would have continued to be if we didn't currently extend to lower prices. Without this very extension to lower prices, we would have been forced to consider very likely this outcome of an initial 5-wave move to the downside, which, based on Elliott Wave theory, suggests that after a 3-wave correction into the area of resistance, we can expect with high likelihood at least another 5-wave move to the downside in trend continuation. Now, of course, this works out both ways, but in this case, it is a bearish setup. But with this development of getting this additional extension, what becomes a preferred interpretation, in my opinion, is this white scenario where we are tracking an ABC structure, which is a valid count for a wave 4 to be complete. The orange interpretation wouldn't have been a valid count for this wave 4 in yellow. We would have had to consider extensions and quite possibly a failure. Now, ultimately, this does not guarantee that this structure, this setup will work out, but we have the levels of support we can track for such an interpretation, for such an idea for extensions to higher prices. And we have highlighted in the previous videos a couple of key elements within this pattern. Firstly, if I am to consider this interpretation of an ABC structure, we can even identify the ideal target for the wave C, which is the 100% extension of the wave A. That sits right above the last level of support at the 61.8% retracement. Now, sure, it is an ideal target, it doesn't mean it will get there or that it will even stop there, but it is a level the wave C is generally drawn towards. It is the most common target for such a wave C. Then we go in a smaller time frame, and within this wave C, we are once again tracking an ending diagonal on this chart. And within this ending diagonal, we are looking for an ABC pattern to form within this wave 5. We have provided this interpretation, this resistance area internally in the previous video, and we have highlighted once more the ideal target for the wave C, which in this case also is the 100% extension of the wave A. Now, since the previous video, we did actually form an extension to higher prices, a slight reset of the wave B, so we would now need to readjust the ideal target, but that sits perfectly in confluence with the ideal target for the overall larger wave C at the 100% extension of the wave A at $121. So from the perspective of having targets, we are looking quite clearly for this area to possibly be the end of this correction. Of course, no guarantee, this is not financial advice. And now we need to start making further considerations for this overall structure. Firstly, I would find it likely that this structure would not extend even further. The pattern doesn't work too well for this being still part of the initial push to the downside. I actually like for this to be the wave B top. It has even fulfilled very clearly the minimum expectations. It has formed a 3-wave correction into the area of resistance, and we are looking to form a 5-wave move to the downside within this wave C. So that would be our basic expectation for a wave C generally. Now the question is if we will actually get to those levels, this ideal target for the wave C. And I'm quite unsure of that, because the internal structure in this area actually allows a bottom to form sooner rather than later, based solely on the fact that within this wave C, we can identify a 5-wave pattern to potentially form quite soon. So in this structure, once again, it is a wave C. We are tracking a 5-wave pattern, and we are looking for the wave 1 to have already formed a bottom in this initial push to the downside, and even the wave 3 has already achieved its ideal targets, right? It has pushed into the 138.2% extension of the wave 1, and now we are looking to see if we get a reversal in a wave 4 correction. Yeah, let's do a short summary. In this wave C, we can consider the wave 3 to have bottomed, even within the idea of an impulse. This structure actually works quite well for that. So all we really need to have a wave C complete from a technical perspective is a wave 4 correction and a wave 5, and this would be done. This would no longer need to form extensions to lower prices. And of course, this is not a prediction that it will not form further extensions to lower prices, as currently even this wave 3 itself can very easily extend. So we can track resistance levels for even an early signal that a bottom would be in place, at least within this structure. And for that, I would be watching the $140 level to be the last level of resistance for this interpretation. Yeah, a sustained break above the 50% retracement would be our indication that this wave to the downside would likely not extend. And to be honest, if we get that break, I wouldn't really even trust this as a wave C. I would start looking for some other potential structures, some other potential patterns in this area. But ultimately, what I'm trying to point at is the fact that we might not actually see the ideal target for the overall wave C reached within this structure, right? This is what is being suggested by the internal structure in the wave C in this area. So let's do a recap. On this chart, we are looking to potentially build a larger wave 4 in yellow before resuming our trend to the upside. We have the area of support extend down to around $118, the 61.8% retracement, and we also have structural support in this area that can typically be expected to help in forming a reversal. This doesn't mean it will not be broken, so it's not a signal for a stop loss to be placed here. And we are primarily focusing currently on this white interpretation, where we would like to see an A, B, C pattern to be formed in this area. We could currently expect to be in the later stages of the wave C itself. In fact, we would expect to be within the wave C of the wave 5. And once this wave C is complete, we technically have a full count in this structure, and extensions to lower prices would not really be necessary for the white scenario to be considered complete. Other than that, we have some confluence for the ideal target around the $121 level for the wave C within the wave 5 and the overall wave C within the wave 4 in yellow. But we actually get a counterpoint from the internal structure we have in this latest development to the downside that is suggesting the possibility of a count forming a bottom sooner than you may typically expect. And for now, there isn't much to add beyond this. These are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoy our content and want to support us directly, check out our channel membership. Other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days ahead. And until then, I wish you a nice day, and I hope to see you in the next video. Bye bye.